And equity markets tend to rally up about 1% on a plethora of good news, good employment data, some good confidence number, not too bad. Trump urges the Fed Powell to reduce rates by 1%. He says it needs a bit of an injection. I think Powell's sort of in the right mood to control what actually happens there. Well, at the moment anyway. Let's see what happens. China trade talks resume in London. This is a positive step. But remember, tariffs will still be in place. The question is how much and how much that will affect economic growth. ECB lowers rates by 0.25%. Lagarde came out and says, well, that's probably about it for the ease into the monetary policy. So let's hope the economy starts to improve in Europe. But first of all, let's have a look at what's happening there. As we know, equity markets had a good rally, 1%. They're getting to some really top, high valuation levels, I feel. But at the end of the day, the market and investors are still quite confident of what's happening. Those unemployment rate came in, which wasn't too bad, up 139,000, slightly higher than expected. But I think the most important thing here is that the April and March's figures have been revised lower. So where we thought we had an extra 95,000 jobs, we haven't got that. So those numbers came in a little bit weaker. So it's interesting the way the stats are coming out, because when we expect a bullish number, it's sort of no one really checks the revisions. But if you do check the revisions, you can see those numbers were weaker than expected. Also, what did we see? We saw a PMI composite came up. That was quite positive, returned a little bit of optimism to the market. The interesting thing here, that bounced off a 19-month low. So the market's now going to assess whether or not that's something that's going to hang around with us for some time, whether or not it's quite positive, and whether or not we're going to have a much higher run on US equity markets. We did put a little bit of a comparison in today's report, where we had a look at the PMI against the employment number, and you can really get a sense of what's actually happening, I feel. Non-farm payrolls are not that positive, and PMI is rolling over. So although optimism is there, so really the question we've got to ask ourselves, why are equity markets sort of traveling to these highs? And when we've sort of been quite bearish, the economic outlook, interest rates are relatively high levels still in the States. Trump looking to reduce rates by another 1%. Powell will be in control there. Let's see what happens. But why are equity markets so strong? And I think that to me is the interesting thing, because the imposition of tariffs, whether it's 10%, but we've got 25 and 50%, that is going to affect the global economy, and that will affect the US economy over time. The question is, why is it not affecting it now? Because we always say that the equity markets often look ahead. So if the equity markets are actually looking ahead and realising we've got slow economic growth, then we should see readjustment in valuations. But that is not happening, and that's becoming quite frustrating. But anyway, what we do think, we think the markets are looking at positive things. The renewed talk with the US and China trade, I think, which is one that's more of a hope trade. People are saying, well, look, that's going to keep things and push things a little bit higher. At the same time, we've still got central banks moving around the globe, and basically those central banks are sort of lowering rates, easing monetary policy. So that's quite a positive thing. That keeps people sort of wanting to move into the equities, and I think that's not too bad. I think in the States, though, the central bank has more of a heightened issue there, or the US government has more of a heightened issue. Although global rates are coming down, the US rates might stay there. But remember also, we've got that big funding issue coming up in June. Now, I did spend a little bit of time with that in the report, so have a read. There's a lot of money that has to be rolled over, $6.5 trillion in debt. The important thing here is that debt has to be refinanced at a higher level. Who pays for that? And I think that's something to keep an eye on. Obviously the government, and that sort of sends in a whole lot of new trigger points for me in terms of sustainability of this rally. Okay, as we know also, US consumer and labour data, that's shown resilience, remarkable showing resilience there. And I think that is remarkable. And we're seeing household spending being relatively stable. And in my mind, that's good. Although we have to contend ourselves with, these are volatile numbers. They can be quite volatile, and they can turn around on a dime. So just be very close there. And that, whilst the sort of momentum isn't there, there's more issues, then that will turn around. And I think that's consumer sentiment is something there which we know is pretty important. So keep an eye on that. Also, we're seeing this global rotation, and it's everyone's seeing it in all the economies. And I think you find that this rotation, is quite important, where people are saying, well, okay, well, I know what's happening in interest rates. I know what's happening around the world. I know what the central banks are doing. I know that we've got costs, but we've got this rotation where people are saying, well, I'm not going to get good returns in interest rates, so I'm going to rotate into equities where I can get a capital appreciation, dividend, yield. Now, this is a fear of missing out type of play, which I see, and it's just people saying, well, look, I'm throwing the baton in, I've got to get on, and that's what I think we're seeing. So a lot of large flows are rotating out of interest rates and moving into equities on a global basis, and that's seeing these equity markets sustained. So I think if anything there, equity markets, appreciation and yield, and I think people are actually looking at. And I think finally, there's just a level of optimism there about the trade talks are going well, but as we know, this is going to go on for ages, because you're not going to get China and the US resolve something overnight. So whilst that's there, we've still got, other tariffs which are going in. So I just still can't see it. But anyway, let's see what happens through there. Okay, next week, in terms of the data, not a lot going out there. We're going to keep pretty close to the Elon Musk-Trump scenario, because that's obviously creating a little bit of flack. That could be quite interesting. But on the economic front, pretty quiet. We've got US CPI, PPI reports, which will be quiet. University of Michigan Consumer Sentiment Survey. Once again, I think that's going to be very important. I guess that's probably what we've got to major in the States, really.